Good afternoon to you all. Really sorry not to be with you, even though I know that David Bradbury will be with you later. I have to give you the perspective of an international organization on the international tax debate. And you know that at the OECD, we are precisely dealing with international tax issues. Two or three key messages there. One, as you may have seen, international tax is at the top of the G20 agenda, at the political agenda in all the countries. How come is the case? Because the international tax rules and the behavior of all the players, starting with the multinational companies, has been such that a number of questions have been raised. The people are tired of facing increased taxes and see that because of the deficiencies of the international tax framework, some players, the multinationals, don't pay as much as it would expected. And as a result, we have launched at the OECD the Base Erosion and Profit Shifting Project, which takes place in a broader context of improved transparency as regards, for instance, the fact that bank secrecy is coming to an end. And that's another G20 priority, which is about fighting bank secrecy and putting an end to tax haven. So international tax is on the top of the agenda. And this will have major consequences on both the governments, who will have to improve the compliance, but who will also have to better cooperate so that the sovereignties, the tax sovereignties, better articulate and make sure that the coordination will address the gaps between the sovereignties so that the global businesses can operate in a tax environment which is also global, which will provide for the elimination of double taxation, which is bad for cross-border investment, and we need cross-border investment, but which will not provide opportunities for double non-taxation. Consequences for governments, but consequences also for the private sector, for the companies, for those who create value. It's very important to support value creation, to have tax regimes which are conducive to investments. But it's also extremely important that there is social responsibility in this area, that tax planning is not too aggressive. It's fine to be legal. It must be legal. And within the framework of law, it's fine to reduce your tax burden, but not to the point where you can actually divorce the location of the profits from the location of the activities. Put all your taxable profits in a no-tax jurisdiction where nothing is happening, while the value creation is happening in countries which are high-tax countries where companies wouldn't pay their share of taxes. So I think this new political environment for international tax has been a wake-up call for many players, and I was very sensitive to questions from social responsible investors who asked, well, what are the consequences of this aggressive tax planning for our policy of investment? This is now a question. And I think tax is now in the boardroom, which is good news, because beyond the schemes which are used by tax advisors, by tax directors, we need to have the CEOs, the CFOs to reflect on the overall strategy of group. And we at the OECD, we are very supportive of that move. Again, we want to offer a sound international tax environment which will provide for the elimination of double taxation without facilitating double non-taxation. And we need you, we need this type of debate to make progress with the support of the business community on the one hand, and with the support of the NGOs and the civil society on the other hand. So I wish you a good day of debate, and we look forward to hearing from the conclusion of that day. Thank you.